welcome to a new video of IPO analysis by ChoiceBroking. Today we will be reviewing the IPO of Adani Wilmar Ltd. We'll start with the company's background, then we'll talk about the key highlights, financial performance of the company, issue details of the IPO, objectives of the IPO, and in the end, our recommendation. I am Siddhi Acharya, Fundamental Research Analyst, and I welcome you all to our YouTube channel, Choice. Adani Wilmar was founded in 1999 as a joint venture between the Adani Group and the Wilmar Group. It is an FMCG food company which offers essential kitchen commodities such as edible oil, wheat flour, sugar, rice, pulses, etc., including their flagship brand Fortune, which is the largest selling oil brand in India. Its product portfolio is divided in three categories: edible oil, packaged food and FMCG, and industry essentials. Majority of its revenue comes from the branded product, which accounted for around 73% of the edible oil and food and FMCG total sales in FY21. As of 31st March 2021, the company's edible oil brand was the dominant oil brand in India with a total market share of 18.3%. Apart from this, it had a market share of 18% in the branded soya chunks market, 3.4% in the branded wheat flour market, and 6.6% in the rice market. As of 19 January 2022, it has 22 plants across 10 states in India, comprising of 10 crushing units and 19 refineries. Its refinery in Mundra is the largest single location refinery in India, with a designed capacity of 5,000 tons per day. On distribution front, Adani Wilmar has the largest distribution network among all the branded edible oil companies in India. As of 30th September 2021, it had 5,560 distributors catering to over 1.6 million retail outlets. Over FY19 to FY21, Adani Wilmar reported a strong growth in business with stability in the operating profits. This was mainly aided by higher realization from the edible oil product, which resulted from a surge in the international commodity prices in FY21. The company reported a 13.5% CAGR rise in the top line during the period, which stood at 37,090 crore rupees in FY21. The operating expenditure increased by 13.7% CAGR, which was higher than the top line growth, thereby leading to a 36 basis point contraction in the EBITDA margin, which stood at 3.6% in FY21. Backed by lower finance costs and lower effective tax rate, the company's reported profit after tax increased by 39.2% CAGR and stood at 727 crores in FY21. We are forecasting a top-line growth of 11.8% CAGR over FY21 to FY24. EBITDA margin is likely to be contracted by 16 basis points, but mainly on account of lower finance costs after the repayment of borrowings from the IPO proceeds. We forecast the PAT margins to expand by 21 basis points. The company has priced its IPO at a price band of 218 rupees to 230 rupees. There will be 65 shares in one lot at the higher price band. The total application money is 14,950 rupees. The IPO opens on 27 January and closes on 31st January. The company is planning to raise 3,600 crores through this IPO. Out of this, 1,900 crores will be used for capital expenditure, 450 crores will be used for strategic acquisitions and investments, 1,059 crores will be used for the repayment of debts, and the remaining amount for general corporate purposes. At the higher price band, Adani Wilmar is demanding a PE multiple of 37.5x, which is at a discount to the peer average of 58.9x. Edible oil business is likely to have a secular growth trend, but there is a huge untapped market for its food and FMCG business. Considering all these factors, we would recommend our investors to subscribe for this issue. If you liked our video, please click on the like button and do subscribe to our channel to never miss an update on the upcoming IPOs. Thank you for watching, and I will see you next time.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.